Good evening, ma'am.
Good evening, dear. Page number 30. Take all of you, page number 30, 30.
Taken, ma'am.
Yeah. So today we are going to learn adjustment of capital. Now what is the meaning of adjustment of capital? What happens whenever a new partner comes into the partnership business? The old partner sometime they wants to change their capital. Now what is the meaning of they want to change their capital? They want to make adjustment in their capital. They will fix some amount of capital.
Excuse me, ma'am.
Yes,
Page number, ma'am.
page number 30, 30, 30, 30.
Yes, ma'am.
Yeah. So what they will do, they will fix their capital, the old partner. For example, say now after the admission of the new partner, our capital will be 1 lakh rupees. For example, like that they will decide. So we have to make the adjustment and make their capital up to 1 lakh. If after making adjustment the capital is more than 1 lakh, they will withdraw. They will means I'm talking about the old partners, because the new partner he is going to bring his share of capital, so no need to adjust any capital of new partner, because he is joining newly and he will bring his share of capital into the business. Only the old partner needs to adjust their capital. So if they want to withdraw, they will withdraw. If excess capital is there from the business, they will take home. If their capital is less in the business, then they will bring more capital. That is what we are going to learn. So first, when new partner's capital is not given, in this there is two cases like adjustment of capital. There are two cases in adjustment of capital in admission of a partner. In first case, how you will, first of all, how you will come to know whether the question is asking you to make adjustment of capital? Very simple. Okay, in first case what will happen, listen carefully. New partner's share will be given in the question, and new partner how much he brings, his share of capital will be given. So two things you will find in question. First, new partner's share of capital and new partner's share. Suppose new partner is coming for 1/4 share and he is bringing 50,000 as his share of capital. So these two things will be given in the question. This is the first case of making adjustment of capital, and the question will tell you that the capital needs to be adjusted in new profit sharing ratio, like that some sentence will be there in adjustment. Now what you will do if it is case 1? Very easy. You know the new partner's share and his capital. As I told you, suppose the new partner is C. A and B are old partners. New partner is C. He is coming into the partnership business. He is coming for 1/4 share. For example, for 1/4 share, for he is bringing 4 lakh rupees, for example, as his share of capital. And in adjustment it is given that the capital of old partner will be adjusted in new profit sharing ratio. Like that some sentence will be given. By reading the sentence you can understand it as adjustment of capital. But as I told you, there are two cases. So after coming to know that this is adjustment of capital question, you must know which case is that. Accordingly you can solve. So what I said, I am talking about only the first case in which you will find the new share of the partner and his share of capital. Both these items will be given in the question. This will be the first case. Now very easy. First you have to identify total capital of the firm. When I am talking about total capital means A, B and C. Okay, total capital of new firm, that is after new partners admission you have to calculate total capital of the new firm. In that total capital A plus B plus C, A is capital plus B is capital plus C is capital. So how you will calculate? Suppose C is the new partner, he is coming for 1/4 share and he is bringing 4 lakh. You have to do reciprocal of the share of C. 4 lakh he brings the capital for 1/4 share. So 4 lakh into 4 by 1. His share is 1 by 4. His capital is 4 lakh. Take his share of capital. His means the new partner's capital. Now I am talking about only new partner's capital. So it is 4 lakh into reciprocal of his share. What is his share? 1 by 4. Reciprocal means you have to do the reverse thing. 4 by 1. If it is 3 by 4, 4 by 3. If it is 1 by 5, 5 by 1. You have to just reverse his share. You have to multiply his share of capital by reciprocal of his share. By doing this, what will happen? You are going to get total capital of the new firm. Okay. So once you get total capital of the new firm, very easy. Just distribute that capital in the new profit sharing ratio. New profit sharing ratio may be given in the question. If it is given new profit sharing ratio of ABC, just distribute the total capital of new firm in that ratio. If new ratio is not given in the question, then you know what is the formula. Old ratio minus sacrificing ratio. If you do that, you will get the new profit sharing ratio. Then distribute it accordingly. After doing all this adjustment in working notes, all these you are going to do in working notes only. After that, normally you have to prepare revaluation account, then partners capital account. So when you start preparing partners capital account, first whatever profit loss you got from revaluation account, you will transfer to partners capital account. Then normally what you are going to do, you will write the balance from balance sheet. Old balance sheet will be given in the question, so capital balance you can write. Any distributable items, I have taught you everything. If in the liability side I told you 3-4 items, it is there, then you will write in the credit side of partners capital account. If any item is given in the asset side of balance sheet, you have to write in the debit side of partners capital account. For example, 2-3 items I told you: goodwill, PL account. Asset side of balance sheet I am talking about. PL account balance means loss, and if any existing goodwill is given, or like advertisement suspense, defend revenue expenditure, these 3 to 4 items, that's it. And in liability side, what I have taught you: contingency reserve, general reserve. If workmen's compensation reserve is given, you have to see the adjustment, how much liability is there. After liability, if any surplus is left out, distribute among partners. If no surplus, if any loss, show it in the revaluation account debit side. In this way we have already learnt. Investment fluctuation fund also, you will find investment in the asset side, and in adjustment, value of the investment will be given. Accordingly you have to see. If any loss, adjust through investment fluctuation reserve. If any surplus is left, suppose there is no loss in investment, then investment fluctuation reserve you can distribute among partners in this way. After doing all these things, what we normally do, if you are preparing partners capital account, after doing all these things, what you will do, you will first make some total of credit side, then you will see total of debit side. Suppose credit side is more, then the balancing figure will fall in the debit side. You will write to balance carried down and the balancing figure in respective partners capital account. This is what you used to do. Now in adjustment of capital, what you are going to do in working notes, whatever new capital you have calculated of each partner individually according to new profit sharing ratio, to balance CD first you will write that amount only. You should not do that balancing part. Whenever adjustment of capital comes, you should not do the balancing part. Before balancing part, you have to transfer everything. Everything is the same. Just you have to wait and don't write to balance CD the balancing figure, because now their new capital will be whatever we have calculated. That will be their new capital. We have to show in the new balance sheet that capital only. So you have to write the new capital which we have calculated to balance CD. After doing that, you have to do the balancing part. After writing the balance CD, if you do the balancing part, you may find sometime debit side is more, sometime credit side is more. So the balancing figure, now what you are going to write, whatever the balancing figure comes, you have to write by cash or to cash. Suppose sometime if you read the question, in question they will say that current account. Okay, so adjustment should be done through current account. In this way the question may be there. So in such a case, what you are going to do? If that is the case, you have to make capital adjustment through current account. The same, instead of writing by cash or to cash, you have to write by current account or to current account. Shall I repeat the first case or it is clear? Harish, Amrita, Kirtika, please let me know first case is clear to you or you have any doubt.
No, ma'am.
Okay. So we will do the question. Don't worry. First try to understand, because how you have to do the capital adjustment, you must be thorough. You should just follow the steps, nothing else. Because rest part of the question will be same. Now, what will be the case 2? There will be second case, okay? So, first we will read case 1. Case 1, how you will find? C brings in proportionate capital, okay? No. This is not actually, just a moment. Just now, whatever I have taught you, it is case 2. We will study case 1. So, case 2, you can check page number 32. 32. Okay. 32. 32. Just now, whatever I have taught you, it is case 2. So, you can follow the step. First step, find new partners share. It will be given in the question. New partners share will be there in the question itself. 1/4, 1/5, 1/6, whatever you will find in the question. Then second step, find new partners capital. That will be also there in the question. Suppose C is the new partner. The question will be like this. C is coming for 1/4 share and he is bringing his share of capital as 50,000, 60,000, 1 lakh, 2 lakh, whatever it will be there in the question. So you have to read it thoroughly. Then calculate total capital using new partners share and capital. As I told you, new partners share will be there in the question. New partners capital will be there in the question. So you have to write the new partners capital and multiply by reciprocal of new partners share. Suppose he is coming for 1/4. What is the reciprocal of 1/4? 4 by 1. Suppose 3 by 4, 4 by 3. Whatever his share, new partner share, just do the reciprocal with his share of capital. By doing this, what you are going to get? Total capital of the new firm. And distribute this capital in new ratio. Then what you will do? You will distribute the new partners capital in new ratio. For example, the capital of example, page number 33, whatever case, that is the second case just now I have taught you. For that we are going to do the example. The capital of A and B after all adjustment are. After all adjustment, what is the meaning of this line? Like writing the revaluation profit or loss, if any reserve or any PL credit balance is there in the balance sheet, transferring that into partners capital account. In the same way, in the debit side also, if any existing goodwill or PL account balance, anything is there in the balance sheet, then we will transfer that. After doing all these things, this is the meaning of adjustment. Already in the question they have given, after making all the adjustment, capital of A and B means the normal balance CD. Suppose adjustment of capital is not there in the question, what we will do? We will transfer everything to the partner's capital account. We will make sum total of debit and credit. We will write balance CD, whatever the balancing figure comes. So that amount of capital is how much? That balance CD is how much? That is 45,000 and 45,000. So both A and B, they are having 45,000, 45,000. After making all the adjustment, the balance CD. C is admitted. Now C is the new partner. He comes into the business and the new ratio is 3:2:1. So new profit sharing ratio is also given. Old is not given. We have to understand, if we know in partnership question, if old ratio is not given, what is the meaning of that? They are equal partners. Adjust, C brings 30,000 as his capital. So see how much he is bringing capital, 30,000. Now you can calculate C's share. It is also in the question only. How? New ratio is given 3:2:1. So can you tell me what is C's share in this? 1/6. Again, you should not struck or you should not get confused. Oh my God, C's share is not given. You have to use your brain. New share is given, but separately they did not mention C's share. You can calculate, na? A, B, C, that is 3:2:1. So 1/6 is the C's share. C is coming for 1/6. In this way, you have to understand. Sometimes question will be like this. They have a twist, a little twist. So you should think. Understood, Amrita, Kirtika?
Yes, ma'am.
Okay. So we know C's share of capital 30,000 and his share also we have calculated 1/6. We know both these things. Adjust the capital of all partners in new profit sharing ratio. They are asking you to adjust all partners capital in new profit sharing ratio. So first you know the two things. C's share 1/6, C's capital 30,000. First you have to calculate total capital of the new firm. After C's admission, whatever the capital is, that is known as capital of the new firm. How you are going to calculate? 30,000 share of new partner multiplied by reciprocal profit sharing of who? New partner. 1/6, make the reciprocal 6/1. 1,80,000 is the capital of the new firm. Now, this 1,80,000 should be distributed among all the partners in new profit sharing ratio. That is given in the question, 3:2:1. So, new capitals are, A's new capital how much? 1,80,000 into 3/6, 90,000. B's new capital 1,80,000 into 2/6. C's new capital 1,80,000 into 1/6. If you do like this, that is to balance CD. When you prepare partner's capital account, in that you used to write to balance CD in the debit side of partner's capital account. There you will write this new balances. You are not going to do like old method, like normally you will do the total of debit credit and write the balancing figure. No, whenever there is adjustment of capital, be very careful, don't do that mistake. If the question is adjustment of capital, you have to follow these steps. To balance CD, you have to write this new capital only, 90,000, 60,000, 30,000. After writing this, you have to do the balancing. If you do, sometime debit side will be more, sometime credit side will be more. The same process, debit and credit, you have to make sum total. Whichever side is less, you have to write the balancing figure. Now, what is the name for that balancing figure? When you solve question, adjustment of capital to cash or by cash. If the balance comes in debit side, balancing figure, write to cash. If the balancing figure falls in the credit side, write by cash. Sometimes the question will tell you do the adjustment through current account. So you have to write to current account or by current account. Debit side is balancing figure means to current account. If the balancing figure falls in credit side, by current account. In this way you have to do the question. Now old capitals are given by balance BD. This given in the question 45, 45. These are the old balances. A's capital, B's capital, and C's capital 30,000. We know C is the new partner. He doesn't have any old balance. He will bring for the first time only. He is going to bring his share of capital, that is 30,000. Now just try to understand. Normally by solving the question you find that the real capital of A and B are old partners. So A's balance comes 45,000. But actually now A should have 90,000 capital, but his capital comes to 45,000. So whatever the balancing figure 45,000 comes, it means he needs to bring 45,000 in cash. A will bring 45,000 in cash. So if A is bringing, what will be the journal entry? Cash account debit to A's capital account. So in the credit side of A's capital account, the balancing figure will fall. There we have to write by cash in this way. So in the same way, if you see B's capital account, if you do the balancing part, you will find that B is having, actually B, after making all the adjustment everything, B is having 45,000 now. But actually he should have, as per the new capital rule, he must have 60,000. So again 15,000 B will also bring. So the journal entry will be cash account debit to B's capital account. Why cash account debit? Cash is coming into the business. B needs to bring, and a liability of the business is also increasing, because whenever the business closes or shutdowns, business needs to pay this capital to their partners. That is why. And whenever liability increases, we credit it. That is the reason. Cash account debit to B's capital account. Now C. For C, the normal journal entry. C will bring. C's new partner always brings capital and goodwill. So C's capital account will be credited. Cash account debit to C's capital account 30,000, 30,000. Any doubt in case 1? Tell me, Amrita,
No,
Kritika, Harish. Okay. Now we are going to see case number 1. In case number 1, adjustment of capital, how you will find the question? Very, very easy. How you will come to know whether this is case 1 or case 2? Remember, when you read the question and you come to know that this is adjustment of capital, it will be written in the question. No need to worry, because relating, if the question is adjustment of capital, in the adjustment one line will be there. By reading that line you will come to know, okay, this is adjustment of capital. The main thing is you must know whether this is case 1 or case 2. You must identify to follow the steps and solve the question correctly. So if it is case 1, you will not find the new partner's share of capital in the question. After reading the entire question, nowhere you will find how much the new partner brings his share of capital. So that will be what? Case number 1. That will be case number 1. Once you read the question, you can search. Nowhere in the question they will tell you how much the new partner brings his share of capital. It is very, very easy. Nothing, very simple. Just you have to find out how much the new partner brings his share of capital. That is only in case number 1. Adjustment of capital is how much the new partner brings his share of capital. Now, how you are going to do that type of question if it is case number 1? Very simple. No need to worry. Just prepare revaluation account. Prepare partner's capital account. Prepare partner's capital account means normal way. What you will do, you will write all the things from balance sheet, debit, credit, as I taught you. Not debit, credit. Balance sheet doesn't have debit, credit, liability, assets. both these things you will transfer if any item. After doing all these things, what you are going to do? To balance CD, simply you are going to calculate like you used to do. Just do it. Write the balance CD also in this question. Like if it is case 1, if the new partner's capital is not known to you, just write the balance CD. Normally do the partner's capital account. After that only you can calculate the new partner's capital. How? But the share of new partner will be given in the question. Suppose A and B are old partner, C is the new partner. So C comes for 1/4 share, like that. So his share will be given in the question. His capital will not be given. You will know his share. Even if his share is not known, as I told you, suppose new profit sharing ratio is given, you can easily come to know for how much share the new partner is coming. Okay. So in this way, you will come to know for how much share the new partner is coming. On the basis of that, you are going to calculate his share on the basis of old partner's capital. Now, what is the meaning of old partner's capital? You have calculated to balance CD in normal way, normally how you used to calculate. Now, in working notes, what you are going to do? You are going to add the balance CD of A and B. Who are A and B? Old partners. So, old partners balance CD. Remember, old partners balance CD, which you will get only after preparing partners capital account. Just combine those two and write the total amount of capital balance CD of A and B, old partner. After that, what you will do? Suppose C is the new partner. Suppose C is coming for 1/4 share, then assume that total share of the firm 1. Assume, you have to assume total, you have to write in this way, let total share of the firm is 1. Profit share, we are talking about profit share. Okay, now if in that 1/4 is given to the new partner, then remaining share, how much will be the remaining share? Remaining share equals to 1 minus 1/4. It will be 3/4. Now this 3/4 profit sharing will be for whom? For the old partners. Suppose A and B are old partners, then this 3/4 is the profit which will be shared among A and B. Now what you are going to do? You know the combined capital of A and B, the balance CD. You have added A's balance CD, B's balance CD together. So you know balance CD of A and B, and that capital is for how much share? 3/4 share. Again you have to do the reciprocal only in order to calculate total capital of the firm. What you will do? To calculate total capital of the firm equals to combined capital of A and B. A and B are old partners. Combined capital means to balance CD, which we got after preparing partners capital account, into A and B's share is 3/4. The remaining share after giving the new partner's share, that is 1/4, remaining share of old partner is 3/4. For 3/4, this is the capital, combined capital. Do the reciprocal of 3/4, 4/3. By doing this, you are going to get total capital of the firm. And in that total capital of the firm, just calculate the new partner's share of capital 1/4. And you have to write to balance CD in the new partner's capital amount column. Whatever, like suppose 3 lakh, 1 lakh, 4 lakh, after calculation only you will come to know how much it is coming. Just simply write that amount. But you have to write both the side. Which side first? Suppose the new partner brings his share of capital, what will be the journal entry? Always go for journal entry. Whenever new partner brings his share of capital, what journal entry you will pass? Bank account or cash account debit to, suppose C is the new partner, C is capital account. So in the credit side of new partner's capital account, you will write by bank or by cash, and write in C's amount column the amount brought by C. After that, what you will do? In the debit side of partners capital account, to balance CD, A and B already written after calculating the balancing figure. Only we don't know C's share. Now we came to know, write the C's share of capital balance CD. That's all. Any doubt in this? There are two cases, adjustment of capital in admission of a partner, two cases, only two cases. In retirement you will have four cases. After this, retirement is the chapter in which adjustment of capital will be four. Here only two, very easy. First case, share of capital and the profit sharing, both will be given in the question. C comes for 1/4 and brings 50,000. Easily total capital of the firm you can calculate. On the basis of that, what you will do? In new profit sharing ratio, total capital will be distributed among all the partners. Then what about the other case? New partners share of capital will not be given in the question. You have to find out new partners capital. How? Just do the question simply like we used to do. Partners capital account to balance CD. Till balance CD, no issues. Old partners A and B, you will get the balance CD by preparing partners capital account. After that, working note start. Suppose C is the new partner coming for 1/4 share. Then let the total share be 1. Remaining share equals to 1 minus 1/4. The new partner's share you have to deduct from total share. Whatever the remaining share, suppose 3/4, it comes 3/4. Then total combined capital of A and B, suppose 4 lakh. And 3/4 is the remaining share. So 4 lakh into 4/3. Total capital of the new firm you will get. In that, multiply that into 1/4. The new partner's share. You will get his amount of capital. Understood or any doubt you are having? Kritika, Harish, Amrita, any doubt you all are having or understood? Yes? It is clear or you have any doubt? Please reply, dear. Harish, Kritika, Amrita, I can't hear you. Please reply.
No, ma'am.
Okay, fine. Kirtika, you have any idea why Varsha didn't come to the class today?
No, ma'am.
Okay, fine. Now take page number 34, 34. Taken. Taken page number 34.
Yes, ma'am.
Oh,
Yes.
okay, fine. Comprehensive question of adjustment of capital, very important. Balance sheet of Achla and Bobby as on 31st March 2019. So 31st March 2019. Balance sheet of two partners, Achla and Bobby, are given. So they are old partners. Profit and loss sharing ratio 3:1. Ratio is given 3:1. Old ratio is given, balance sheet is given. Okay. Now, as I told you, whenever balance sheet is given in the question, first see the liability side. Any distributable items are there? Because any distributable items, suppose general reserve, it will not go in the revaluation account. Directly it will go in the partner's capital account. And always, whenever the question tells you to prepare revaluation account, partner's capital account, sometime they may ask balance sheet, sometime they may not ask. But you should know everything, because in boards we cannot assume this will ask. Journal entry also many times they may ask. You should be thorough with journal entries, preparation of accounts, preparation of balance sheet. Each and everything you must practice and be thorough. In boards, anything they may ask, because all these things are in your syllabus only. We can't say why board is asking this, because journal entry you should know. Accounts preparation you must know. Balance sheet also you must know. Many times they don't ask, but you must know because it is in your syllabus. So you cannot ignore anything. Never ignore anything. From beginning, start working hard. Definitely, I know my students are going to score excellent marks in boards. I trust you all. So please do practice. I have full faith in my students. Okay? Is it okay, Harish, Kirtika, Amrita?
Yes. Yes, ma'am.
Okay. But from beginning you have to practice. Nothing in the end, nothing will happen. From now onwards, start working hard. So if you see liability side of the balance sheet, see what are the items. Do you find anything distributable? General reserve. So general reserve is always distributed among partners. But you should go to the adjustment also. I don't know anything may be written regarding general reserve. So adjustment is also equally important. We don't know what is written. I think there is no adjustment regarding general reserve in the question. So, and one more thing, you can just prepare simultaneously all the accounts. Always just prepare revaluation account format and this partners capital account format also, so that whatever item you find, you can post accordingly. Like this general reserve, directly you can post in the credit side of partners capital account by general reserve. Only old partner will get in old ratio. 40,000 into 3 by 1, 40,000 into, sorry, not 3 by 1, 3 by 4. Then 40,000 into 1 by 4. If you calculate, Achla will get 30,000, Bobby will get how much? 10,000. In this way. And workman compensation reserve, but you should go for the adjustment. If you see adjustment number 3, it is written liability on account of workmen compensation amounted to 80,000. So workers are asking 80,000 rupees. And how much reserve is created? Reserve is created only for 50,000. Again it's a loss. Means company thought that 50,000 loss may arise in future. That is why they have created reserve to meet the workers' demand. But workers are asking 80,000. Now liability has increased. 50 from 50 to 80 means 30,000 is the loss. Where you will write this loss? You have to write this loss in the debit side of the revaluation account to claim for workman compensation reserve 30,000, and nothing is left to distribute among the partners. Already the loss of 30,000 has occurred because of this liability, workman compensation. Okay, now nothing in the liability side. Now go for asset side. You have to always check whether any distributable item are given in the asset side. What will be the distributable item among partners? Any goodwill, any PL account balance, or any deferred revenue expenditure, advertisement suspense. These are certain 4 to 5 items which you may find in the asset side. This will go in the debit side of capital account. Nothing like that. On 1st April 2019, they admitted Vihan as a new partner for 1/5 share in the profit of the firm on the following terms. Who is the new partner? 1st April 2019, a new partner comes. His name is Vihan and his share in the profit is 1/5. Now the adjustment is given. Vihan brought 1 lakh as his capital. So we know the new partner's capital. He is bringing 1 lakh capital. Okay. And capital of Achla and Bobby were to be adjusted. See, read the question carefully. So adjustment of capital is there in this question. How we come to know capital of Achla and Bobby were to be adjusted? This line means adjustment of capital on the basis of Vihan's capital. Okay, what they are telling, you have to adjust the old partner's capital, that is Achla and Bobby. On what basis you will adjust? On the basis of Vihan's capital. Means you know the share of Vihan, you know the capital brought by Vihan. So that case you have to apply. Just do the reciprocal of Vihan's share and write the Vihan's capital. You will get total capital of the firm. In this way, that case you have to solve. Any surplus or deficiency